morning, students. So welcome to this session. So in the last session, we were discussing about AS2. We have discussed that what goes under the cost of AS2, how do we get the NRV, net realizable value, what happens when net realizable value or when there is a difference between cost and net realizable value, where that difference goes. So in that case, we have understood the concept behind the AS2 inventory, right? We have talked about all the concepts. I have done till illustration 3. There were a couple of other illustrations were also there, which I wanted to discuss today to make sure that we are done with all the illustrations which are there in the study material. So let me just discuss illustration 4. This is again related to the NRV concept, right? Or this is again related to the inventory concept, right? So let's try and understand that what is happening in this. So it says you are required to value the inventory per kg finished goods consisting of. So we have got material cost, which we have got direct labor cost, which we have got direct variable cost also. Now apart from that, so material, labor and variable cost is easy to understand by taking total of all these, right? By taking total of all these, it's easy for me to find out the value of per unit inventory, right? So per unit inventory was material 200, direct labor 40, direct overheads 20. Now these are the I would say almost everything is variable in nature. So variable is easy to find out because variable, whatever the value is, we consider that as an value per unit. However, the issue comes up when instead of the when we have got fixed expenses also, fixed overhead also. So there are fixed production charges for the year on a normal working capacity of 2 lakhs. So I have the normal working capacity of 2 lakh units and the fixed charges is 20 lakh. So if you remember, we discussed whenever the fixed charges are given, which is 20 lakhs, and that I have produced normal capacity, then I allocate that amount. So my per unit cost is based on this divided by this. So it means my fixed overheads, which will get allocated, is rupees 10 only. So by adding all these, the total cost per unit has come to 270. Now as per the question, it says we have 4,000 kgs of finished products in the inventory stock at the year end. So what is my closing stock? Closing stock is 4,000 units. And cost per kg is 270. So what is going to be the closing stock value? The closing stock value would be the number of units which I have into price per unit. So this would be the value of my closing stock as per the guidance of AS2. Let's quickly look at another illustration. before we jump on to the next topic of today. So the illustration talks about on 31st March 2017, business firm finds that a cost of a partly finished, so it is not completely finished, it is partly finished unit. So it means I have to finish that first before selling that in the market. So cost for partly finished unit in the books is 530. Whereas the unit can be finished in 2017-18 by an additional expenditure of 310. So additional expense required to complete is 310. The finished unit can be sold for 750, but it is subject for 4% brokerage on selling price. Now firm is looking for the advice that which amount should be taken or what amount should be taken in the value of inventory. Now to find out the value of inventory, we have got cost, but we have to find out the net realizable value so that it will be easy for us to find out which one is lower. To find the lower value, NRV formula for the unfinished product or the partly finished product is sale price, which is 750 in this case, cost to complete, which we deduct is 310, whereas cost to sell also get deducted, which is 4% commission. If you remember, we have just discussed in the question. So 4% is the commission. So 30 is the commission, which should be in the negative. So the NRV for this product would be 750 minus 310 minus 30 is 410. Whereas cost is 530. So as per the AS2 rule, we keep the inventory at lower of cost or NRV. When the inventory is kept at lower of cost or NRV, then the closing stock for this unit will come down to 410, and the difference will be taken as loss, which is 530 minus 410, and this will be taken to the profit and loss account. This is something which we do. When NRV is lower. So, essence, Sridhar, as you mentioned that if the capacity is above normal, right? If normal and below normal is there, then we may consider, right? If normal and below normal is there, we consider it with the normal capacity. But if it is above normal, then we take it with the actual capacity. Whatever number of units you have produced, right? Divide your total rent with the number of units produced so that you get the actual value and it is not escalating the overall total cost, right? So that is about the illustrations which we had to discuss. Now last thing, what exactly should go in the disclosures? So whatever we have discussed in the inventory has to be disclosed in some or the other form. Like, what is the accounting policy adopted in measuring the inventory? Every company has to disclose that they are measuring their inventory at lower of cost or NRV. So whatever is lower, we are considering that. Then what is the cost formula we have used? Whether we have used FIFO, whether we have used weighted average, or for retail company, whether they are using retail method, or any other company where they are using standard costing method. So whatever formula they are using, that has to be disclosed, that has to be mentioned, so that user can understand and see that it is consistent from year on year on year. What is the total carrying amount which we have? And appropriate classification, where means that what is the amount which is there in the finished product, work in progress, raw material, consumables, right? So they have given the common classification which is there are work in progress, either finished goods, either stock in trade, either stores or spares, loose tools, consumables. So all these things right, would be shown somewhere in the notes. So user can identify that how much stock is the finished product ready or available with us, how much stock in trade available with us, how much raw material available with us. Just to answer your question, if above normal value is there, then nothing will go to profit and loss account. There is no abnormal gain, right? That is we are trying to say. If you remember, we have discussed, we follow the concept of, right? We follow the concept of prudence also, right? So what we are going to do, we will wait for those inventories to get sold, only then we'll be able to recognize the revenue. It means I have produced the inventory, I have utilized my fixed overheads in such a way that per unit cost related to fixed overheads has come down, right? So we are not going to take abnormal loss abnormal gain in this case to P&L. So it says, assume that partly finished units cannot be sold in semi-finished form. It means that I have to sell that by completing it only. If I have to sell that by completing it only, it means that I have to consider 750 only. If it says that it can be sold, I am in the business of selling the partly finished product also. Then I see what is my intention, whether I want to sell that partly finished product or whether I want to complete those units and sell that in the market. Hope I have answered your question. So this is all about in AS2. I hope that whatever illustrations today and in the last class we have discussed was understood to everybody, and it was clear to all that how exactly we can deal with any question related to inventory. Right. Now I'll move to our next topic, which is cash flow statement. Right. So this is again part of chapter 3, unit 2, right? Overview of accounting standard. So cash flow statement is one of the part of one of the topic of overview of accounting standard is there, right? So before we move on to cash flows first, right? Before we move on to cash flows, my first question is why cash flow is required? What could be the logic of having the cash flows? Then we'll move on to that which entities, right? If you remember, right? Why cash flow is required? Why it or how it adds value, right? Because if we understand from that angle, I would say you know what assets and liabilities you have, that is there in the balance sheet. You know how much profit you have earned, that is there in the profit and loss account. But why the cash flow statement would be required, right? Let's understand this. Meanwhile, you answer that why cash flow is required. I'll just tell you that which companies are required to follow, right? Which companies are required to follow cash flow statement, or which companies are not required to follow cash flow statement. If you remember, in corporates, right? In corporates, we have two categories now, right? Here, I believe that the category is not okay. So if we go by points for material, so there are two categories in the corporate. One is the small and medium enterprise. Other is all other corporates, which is not falling under small and whereas non-corporate we have level 1, level 2, and level 3. Now, which corporates are or which companies are required to follow, or who all are required to follow the cash flow statement AS3? Only those corporates which are falling under, right, other than small and medium enterprises, right, and which are also falling under level 1 for non-corporates, right, if they are following the accounting standard. So at the end of accounting period, right, for all other entities, it is not compulsory, right? It's not necessary that they won't make it. It is not compulsory, right? It is not compulsory. They can still make it. It says during where an enterprise was not covered by this statement during the previous year, because that was small and medium enterprise last year, but this year it has come out of the definition of small and medium enterprise. It says current accounting year, it qualifies, right? So what they need to do? They won't get any further exemptions from cash flow statement. They have to prepare cash flow statement from this year onwards. But they still have the relaxation that for comparison purpose, the corresponding numbers of previous year, they are not required to disclose. If the status of the entity change from small and medium company to other companies. Whereas if I talk about the opposite of that, the company was all other companies other than small and medium companies, but this year it became small and medium company and qualifies, right? And qualifies for not preparing the cash flow this year, if it is coming under the definition or falling under the definition of small and medium companies. Those companies will not get, right? Those companies will not get any rebate current year, right? They are still going to prepare cash flows for another 2 consecutive years, right? It means they still have to follow the rule, and we have to assess whether these companies will remain be there in the small and medium companies definition for longer time, or how it is going to happen. For that purpose, we are not giving them relaxation. We are just asking them to keep preparing the cash flow statement, right? That is about that which companies are required, which companies are not required. Now, as everybody has mentioned, let's look at answer of all of you guys. So basically, what exactly we want to know, right? What exactly we want to know? We want to know the liquidity, right? We want to know the liquidity. But when it comes on the liquidity means that whether companies has enough fund or not to manage the business, right? Whether company has enough fund or not to manage the business, right? So that is one thing, right? Liquidity is the main criteria. So almost everyone has given the right answer, right? But apart from that, what exactly we get in the cash flow statement? In cash flow statement, we see that what are the changes which have happened in the flow of cash or cash equivalent, right? Right, in the flow of to identify, right? So what is the historical change in the flow of cash or cash equivalent? So whenever there is a change in cash and cash flow statement, what exactly is that? How exactly it has come? To determine the future requirement of cash and cash equivalent, for example, let's say today I may have negative cash in the cash flow statement. It means that there would be some future requirement to make, right, or to generate the further cash flows. Otherwise, we are going to suffer, right? We are going to suffer in the business. So why I tell you, right? So one reason we always say cash is always the king. Profit is there for growth. But if you are not getting cash, you cannot run the business, right? To run the business, right, maybe your customer is buying goods on credit, giving you lots and lots of profit. But if they are not paying you on time, so much of profit will never help you to run the business, because your employees would need salary in cash or bank, because your vendors would need cash or bank to make the payment, right? It becomes difficult, and companies face very, very big issue when the cash flows is not good. Okay. Then we talk about assess the ability to generate cash and cash equivalent, right? Assess the ability to generate cash and cash equivalent. I just, before I discuss all these points, let me just go to this. There are three types of activities under cash flow statement, or I would say there are three ways where cash flows could be there. For example, one is from the operation. Means when you are running the business, you are paying off your debt, means you are paying off your creditors, you are purchasing, you are selling, you are getting money from debtors, paying salaries and everything. All these come under operation. So when cash related to operation is there, we call it cash from operating activities. Cash from operating activities. The other type of cash or cash flows could be there, which could be cash from investing activity, all fixed assets, non-current assets movement. If we are buying any non-current asset, if we are buying any investment, if I am giving loan to somebody, right? If I am receiving back my loan which I have given, if I am selling back the asset, receiving money, all those items come under cash from investing activities. And the third one is cash from financing activities. Cash from financing activities. This is related to all equity and non-current liability related. So all equity and non-current liability related items, right? If I have taken loan from the bank, if I have taken or if I have issued shares, issued debentures, all these things, which is like I am getting finance. So that falls under, or I am paying dividend, or I am paying off interest for the loans. All these are related to my finance related work, and this will fall under cash from financing activities. Why I am discussing that? Let's assume one company, right? One company has their balance sheet. One company has their balance sheet, right? For 2 years, year 1 2019, year 2 2018. They have the cash balance. Cash balance here is 1 lakh, and cash balance here in 2019 has gone to 25 lakh. Now, if I just ask you how the company is performing in terms of cash, right, in terms of liquidity, how company is managing their cash, because it has improved drastically. It has improved 25 times. Right? Right? It has improved 25 times from 1 lakh to 25 lakh. Can we say that company, right? So Rushi, if you remember, we discussed that if anything related to asset, non-current assets, right? If I buy asset, sell asset, that will always fall under, right? That will always fall under investing activities, right? I buy asset for operations every time. So all the machineries, all the factories, everything is for operations only, right? So we are not, our business doesn't buy goods or asset for the personal use. They buy it for operations only, right? And all those assets will always be going under the investing activities. Now, coming back to the question, can we say that this company is performing very well in terms of cash? This looks great from 1 lakh to 25 lakh. But if I just try and analyze that, why we do this, why we have these three categories, why we do not have a single we have allocated among three categories is, let's assume there is a difference or change in the cash flows of 24 lakhs. Cash from operating activities was negative, whereas cash from investing activities was again negative. And cash from financing activities, that I have taken a loan of 34 lakhs. By doing this, what is the change which has happened in my cash flow statement? The change which has happened in the cash flow statement is net cash movement. Right? Net cash movement which is there. So net cash movement is 24 lakh, right? So 24 lakh is the movement, but the only thing, if I just ask you, right? Only thing which I just ask you is that if this is 4 lakh negative, 6 lakh negative, and 34 lakh positive, the net is 24 lakh positive. Is it the good for the company? Can we say company is performing very well in the terms of their cash? For that reason, we will try and understand in AS3. Because instead of arranging the funds from the operation, that I am not able to manage anything from the operations, what is happening? Instead of managing the funds from the operation, what I am trying to do, I am going for a loan of 34 lakh. The cash balance has improved or increased. User will not get to know unless I show all three things to them. Right? Rosalind, I would say here non-current and some current liabilities also. Generally, current liabilities goes under working capital, which comes under here. Right? So current asset and current liability generally, right, generally goes under working capital. Right? That is the reason, right? That is the reason we try to take all these current assets there, right? However, if the loan, right? So loan, we need to understand again that if the loan is to finance, right? So if it is related to financial activities, right? So other than the current liabilities, everything else will always be falling under the means all the loans which we take for the business or any issue share capital has been issued or debentures have been issued, debentures paid, interest paid on that. All these will be considered as Ankit, deferred means that I am not incurring anything right now. If it is deferred, right? If it is deferred, right, then it should not be considered. Deferred itself means that I am not incurring right now, I'll incur later. So this is not cash activity alone. Whereas marketing is part of my operations. So it should always goes under the operations. Right? Whereas if it is deferred, then we are not going to talk about it. Now coming back to this, we have seen it's not just that we are just looking at the cash. We are looking at how much cash business is getting from operations, how much cash business is getting from investing activities, how much cash business is getting from financing activities. If we don't do that bifurcation, I have shown you that there may be a case the reader of the financial statement may feel that company is performing very good. But actually, right, actually that was not happening. Actually, thing is that we are incurring, we are not generating enough cash from the business. We are actually taking the loan and that loan is going to add further interest. So that ability company has to assess, right? So we will answer all the questions which you are asking, right? Which is related to commission, interest, compensation, insurance, overdraft in bank, right? If we pay interest, so Sakshi, Tamanna, I would say just wait, right? After this, we will directly be coming to those queries, so it will all automatically get answered, right? We will also understand what would be the future requirement of generating cash and cash equivalent, how much cash we may need if we have by looking at the financials today, right? For example, if you have deficiency in negative cash, which we have already discussed, compare the operational efficiencies of different enterprises. Now, when I compare, I mainly compare not about the loan. Loan anybody can get. Asset can anybody can sell. Basically, I want to compare that whether my cash from operations is good enough as compared to my competitors, right, or not, right? To study liquidity and insolvency position, right? How liquid company is, that's something we talk about. Indicator of amount, timing, and uncertainty of future cash flows, right? We always look at in the information, not in the face of the cash flows, but sometimes we give the notes that this is the amount which is going to come. For example, I have taken some loan, but I have not taken the entire loan right now. I have just taken part of the loan, right? I have just taken part of the loan. That part of the loan, which is still not be taken, how it can impact my future cash flows, that's something we have to. And to check the accuracy of past assessment of future cash flows. See that if we have budgeted the cash flows, right, if we have budgeted some amount, I can compare that with my budget, whether I was able to generate enough cash as compared to my budgets or not, right? I thought I'll be able to generate 10 lakh rupees cash, whether I have generated 10 lakh rupees cash or not, that is very, very important. Only then we will get to know that how company is performing, right? So I hope objective of this is clear to everyone. Now coming to another point, right? Coming to another point, it says when you are preparing the cash flow statement along with these three activities, we will be discussing these three. But there are certain items which neither fall or which are not or which never fall under any of these. That we call cash and cash equivalent. Means something which I am assessing, which actually is nothing but the inflows and outflows, right? However, if company has cash and cash equivalent, that amount will never be recorded here. For example, in the balance sheet, if I have cash balance here, which was just now we discussed, which was 24 lakh this year, and 1 lakh last year. So what we do, we calculate cash from operating activities, we calculate cash from investing activities, we calculate cash from financing activities. In all these, we add opening balance of cash, which is 1 lakh, and it should always be equal, means total of all these should always be equals to the closing balance of cash, which is 25 lakh, right? Which is 25 lakh. It should always be equal so that we find that whether we have recorded everything correctly or not. That is one thing. Now question is, if they are not going to go in these, they are going to get shown separately. What these items could be? Cash is okay, but what could be the cash equivalent? Right? Cash is fine, right? So we can understand what cash in hand is or bank is. What could be the cash equivalent then? Which will also not be considered in any of these activities. So cash equivalent are very, very liquid investments, which we call highly liquid investments, which are very short term. Short term means are readily to convert into cash. For example, let's say I have invested or I have done a small deposit for some time with the bank when I was having some money with me, right? So I have deposited that amount for some time. And what that sometime could be, it says something which is going to get realized within 3 minutes of the time, right? If something is going to get realized within 3 months from the date of acquisition, that liquid asset, right, which can be sold. I'm not talking about a property, right? I cannot sell the property so quickly. I am talking about these are highly liquid asset. Highly liquid asset means if I have a deposit of deposit with the bank for 2 months, I can go back to the bank and break it in minutes. So that kind of thing we are talking about. We are talking about all those highly liquid short-term investment items which we have with us, which can be converted into cash quickly, right? Those items will be treated as cash and cash equivalent. So generally, cash in hand, demand deposit with the bank are cash equivalents. Never take, right? please never take investment in shares or investment in mutual funds as cash equivalent. You may say that today, if you have invested in shares, you have possibility to convert that into cash by just one click. You can sell the asset. Yes, commercial papers could be there, right? You can sell those, right? Right? You can sell those assets, you can sell those shares in the market quickly, right? You can sell those shares quickly in the market, right? You can sell those. But what happens in shares? Share price keep going up and down. You never know that how much amount you are going to get back. Whether you are going to get back 100 rupees, whether you are going to get back 1000 rupees for the same share if the price is up, or whether you are going to get back 10 rupees when the price is down. So because shares carry risk, that is the reason we never consider them in the cash equivalent, right? Otherwise, those other items which we are depositing and can convert into cash quickly, right, will be treated cash equivalent for this particular standard AS3, right? This particular standard of AS3. Okay, now coming on to the next part, meaning of the cash flows. What cash flow means, right? We have seen the meaning of cash and cash equivalent, right? And make sure 3 months criteria should always be considered for the exam purpose. In exam, you may be asked that company has invested amount here with the maturity date of 2 months, 3 months, right? Which can be recovered within 2 to 3 months. If it is mentioning the time, only then you are going to consider that within the cash equivalent. Government securities, yes, if we can convert that into cash quickly. Rosalind. We will be discussing everything, right? Tamanna, deposit in bank where the lock-in is for 3-4 years, right? If the lock-in is for 3-4 years, generally, right? Generally, it will be cash, but I cannot consider that as in cash available to me. I have to give a note, right? I have to give a note that this is the amount somewhere invested. It could be fixed deposit we have seen, and fixed deposit actually nothing but my investing activities. Because fixed deposit, why I am doing that? I want to earn interest on that, right? Fine. So fixed deposit, I want to earn interest on that. Okay. So meaning of term cash flows. Cash flows means all inflows of cash like receipts and all outflow of cash, what is payment. So all the inflows and outflows of cash and cash equivalent will be treated as cash flows. There are certain transactions which doesn't result in cash flows. Some transactions which never result in cash flows. Those transactions should not be reported in the cash flows because there is no inflow and outflow. I want you to answer that what could be those items which do not So Ankit, it comes under the non-current asset, long-term assets, right? It will not be in the same category, but yes, other receivables when it will come there, right? Because that is a deposit which we are giving. So items which do not or transaction which do not impact cash. right? Request you to please answer quickly. What could be the transactions which never have any impact on the cash and they should never be reported in the cash flow statement? Can anyone think about those transactions? Can anyone think about those transactions? Right? Now those transactions which we are talking about right now could be, let's say, depreciations, loss on inventory when NRV is lower. Right? We have just seen in case of AS2. Bonus shares issues. Right? Bonus share issues. All these type of transaction which are not impacting my bad debts. Very good. Right? Credit sales or purchases. Yes, Jagriti, bad debt is fine. Continue asset, exactly. Withdrawal of cash is having the cash movement, but withdrawal of cash is having some sort of cash movement, I would say, but that would impact my cash and cash equivalent. Right? Will not impact my this, but that is a cash transaction. Here, the transactions which do not have the cash involved at all and will never come in the cash movement. Purchase or sell of fixed asset. If I sell, right, I have to pay the money for purchases of the asset, and I will get the money for sale of the asset, right? So all these things which we are talking about, right, may have some cash impact here. However, bad debts, right, Sakshi, very good, right, Tanmay. So depreciation, loss of inventory, bonus issue, impairment, all those things are nothing but answer for the transaction where the cash is not involved. Right? Where the cash is not involved at all. Right? Similarly, movement within the cash or cash equivalent are not cash flows. Right? Movement, like as you mentioned, Shruti, deposit in bank, right? And we have got one more answer. So deposit in cash, withdrawal of cash, all these are nothing but the movement within the cash and cash equivalent. As I mentioned earlier, the movement within cash or cash equivalent never have any impact, or cash and cash equivalent never fall under any of these three categories. So movement there will also not fall under there. So acquisition of cash equivalent investment, I purchased that, deposited that, cash deposited into the bank, right? All these will never have any impact on the cash flow statement. Means operating, financing and investing, right? Now, types of cash flows. Here I have already discussed that there are three categories of the cash flows: operating, investing, and financing. And what is the meaning of that? We have already discussed that. When something we generate from operations, right, means all the P&L items where the cash is involved. So operating income or operating expenses. So if operating incomes and operating expenses are there and cash movement is happening, those items will have an impact on the operating cash flows. It means they are creating the operating cash flows, inflow and outflow both. The other way could be I generate cash or get cash or pay cash from the financing activities, which is by borrowing or by repayment of the borrowers or by issuing equity. So if cash equivalent is going, right, so again, movement of the cash flows, it's a loss, right, which will hit in my profit and loss account, but it will be shown in the cash equivalent only. No, right. So by borrowing or repayment of borrowing, that's something we are talking about. By acquisition or disposal of fixed asset, when we have talked about that anything happening on the non-current asset side, which is my investments, right? My investment in shares, my investment in assets, let's say factory, land, building, anything, that will always be coming under cash from investing activities. So all these types of activity means all these types depicts that there are three types of cash flows. Cash can only come in three ways, either from the operations, either from the loan or the equity holders, or either from by selling the fixed assets, or it will go out when I buy the fixed assets. Right. So all these things will imply that three activities are there: operating cash, investing cash, and financing cash. So let's drill down further what operating cash is, what financing cash is, and what investing cash is. So it says operating activities are the principal revenue producing activities. And this is the most important activities. Diksha, that doesn't allow or that doesn't have any cash movement. I completely agree with you. It doesn't have any cash movement till the time, right? I am not making any payment to that, will not fall under the cash flow statement, right? The only thing what we were saying, that there are some transactions which never have cash flows issues, like bad debts will never have cash flow related issue, because that is the expense which we have recorded today, right? So operating activities is the principal revenue producing activities and is the most important activities from the cash flows understanding. If company is not generating cash from operations, it means there is something wrong with the company. There is something wrong, right? Something wrong with the management of cash from the operating activities. Like, for example, let's say I pay, what could be the issues? Issues could be, when can I have a negative cash from operations? When I pay my creditors in 20 days, my customer pay me in 40 days. Now this situation which we are talking about, it means my creditor will always get paid in 20 days, right? My creditor is always get paid in 20 days, where my customer pay me in 40 days. I will always have cash flow issue because I have to pay upfront, whereas my customer will pay me later. So this becomes very, very important activities for us to understand whether we are generating enough cash. Now, examples of this could be all these items which is related to my operations, like cash purchases, sale of goods, collection from customer from goods, payment to supplier for goods, payment of salaries, wages, payment of rent, all these things will always fall under cash from operations. Second point, cash from investing activities. Investing activities are actually nothing but of long-term assets other than investment which are included in the cash equivalent. Right? So, Pratik, royalty. So when you talk about royalty is related to my operations only because I get royalty for the intellectual property or the technology I have given. That is my business. When that is my business, it means I am getting money for doing my business. That will be cash from operations. Acquisition and disposal of long-term asset will fall under the investment activities. Like example, we can look at receipt from disposal of fixed assets. If I sold my fixed assets, purchase of fixed assets, payment to acquire fixed assets, that will also come here. If I have given loan to anybody, other than customers, right? Loan, if I give loan or advances to the customer, that will not fall under here. If I have loan to given somebody, let's say to my subsidiary only, that loan will also be treated as the investment because I will be earning the interest on that, right? Interest and dividend earned. Right? Interest and dividend earned will always come under the investing activities only, which is not for financial institutions. I will come to this point because for financial institutions, I have a separate slide. So anything which is related to my non-current asset side, which is long-term asset side, all these sale, purchase, acquisition, any income which I am receiving from there will always fall under the cash from investing activities. And at last, financing cash flows. So I guess there is something wrong in this. I have this by mistake is talking about investing activities. Financing cash flows means, so you can note down, financing cash flows means, okay, financing cash flows means Diksha, again, I just mentioned one thing here that when I have enough fund and I am investing somewhere else, whether I am giving loan to somebody, I am doing fixed deposit, I am buying a machinery, I am buying a factory, I am buying a building, all these things will come under the investing activities because that is my money, I am investing something. On the other side, if I have repaid the loan, only that will come under the financing activities. Giving loan to somebody, I am financing someone else, right? So you need to understand financing means that I am arranging finance for myself. How my company is financed, right? So financing has come from how your business is financed, right? That is the reason. So how your business is financed, that is coming here, and financing activities talk about that how you have arranged money from the borrowings, from owner's capital, maybe preference shares or equity shares. Like what could be the examples? Example, I have issued shares, debentures, redemption of debentures paid by the debentures, redemption of preference shares, payment and dividend of dividend and payment of interest. That will also come under the financing activities. Again, other than the financial institutions, that's something would be discussed. So fixed asset, Dikshit, we have just discussed, right? That what exactly it would be. It is investing activities. Rishabh, expenditure on advertisement. Advertisement is my operating expense, right? So that is a related. Advertisement is the operating operation related expenses, right? Yes, Pallavi, I think in the first line I have mistakenly taken something else. So you can correct this, right? So I would request you to correct this. So financing activities, right? So you can delete the first paragraph and read it from here. So financing activities are activities that result in the size and composition of owner's capital and the borrowing of the enterprise. Now, if I talk about simple rule, how do you find out where it should go? From the balance sheet, non-current assets movement, sale, purchase, any interest or anything coming in, that will go to investing activities. Right? That will go to investing activities. Any movement related to equity and non-current liabilities or long-term liabilities. So any item related to equity or non-current liabilities, it will be considered financing activities. Cash from P&L, right? Generally, cash from profit and loss account from P&L operations plus cash from working capital, which is current assets and current liabilities, will go to operating. So there is a clear bifurcation. Which part of the balance sheet, which part of the right? So that's something we can understand. Right? That's something we can understand. Pile, whenever there is a purchase of goods which is there, will go under the operating activities, right? Whether it is on the return basis or whatever it is, right? It will always be. So here we are tracking the cash movement. We are not tracking whether it is revenue or not. We are not tracking anything. We are tracking the cash movement. Muhammad Ali, government grant, generally we get the grant related to the operations of the business. It all depends. If the grant has been received to purchase the asset, then it may impact or it may reduce my investment activities. Otherwise, generally it will always be the operating activities. Exactly. So Diksha, exactly. If you are thinking on the right terms, right? If you are a borrower for long term financing activities, if you are investor, then or lender, right? Then it is then it is investing activities. Okay. Now coming on to, if we are clear with this, we have seen that the net cash flows is three activities which we have discussed: operating, investing, and financing. There are different ways to make the cash flow statement. Now we are not going to make it right now. We'll make it once we finish the entire slides. In the illustration, we'll take the methods that how we prepare the cash flow statements. But that what method do we use? Generally, for investing and financing, we have only one method, so we are not bothered much about that because there is only one method. That is the way we have to prepare the cash flows for investing and financing activities. However, for operating activities, we follow two methods. One is direct method. Another one is indirect method. When it is direct method, what to do? When it is indirect method, what to do? The easiest one is the indirect method because you start with the profit and loss account and come to the conclusion that how much cash we have from the operations. So since it is easy, most of the companies follow indirect method only. Right? However, for exam purpose, you have to follow whatever has been asked. We will be discussing that later. Okay, now coming on to whatever we have seen, those were the obvious questions which everybody can understand, right? So going by this, so whatever we have seen, this is actually the summary of that, right? This is actually the summary of that, whatever we have discussed so far. But coming now is some typical issues. There we need to understand what happens if I am a lender. What happens if I am a lender and I am earning interest on the money I have lended? Earned interest, right? Now for that, I create two types of companies here. Now think from two types of companies. One which comes under the financial institutions, right? So Nisha, I think this will get answered just now. The financial institutions, which are banks, NBFCs, their main job is like Muthoot, ICICI, their main job is to provide loan to the others and earn interest. The other companies which are not coming under the financial institutions, like manufacturing company, Okay, guys. Sorry, it got disconnected. I was discussing that there are two types of companies. If we take, I have taken one company as financial institution, other companies which are not financial institution, which is manufacturing company, trading company, hotel, aviation, any company, airline company, any company. Now, if I talk about what is the main operation of the financial institutions, what bank does, what is the main work of the bank? The main work or main operations of the bank is to provide loan and to earn interest. That is their operation. That is their operation. But for other companies, this is not their operating activities. Their operating activities is to manufacture goods. For example, for hotel, operating activities is to provide food in the restaurant, is to provide room to you, is to provide services to you. They are not providing loan to everybody, right? They only give loan when they have money and they have to give to their subsidiary or to anybody who's generally to the subsidiaries only, or to the parent company, or to some other company if they are having enough fund. But they are not in the business of providing loan and earning the interest. Now, when banks, NBFCs, all the financial institutions, their operation is to provide loan and to earn interest. So these activities will fall under operating activities. On the other side, when we are talking about other companies, these activities fall under investing activities. Hope this is okay with everybody. So it should be very, very clear that why banks are having a different role. Why bank is working differently, that is the reason. The treatment differently, because for them it is the part of their operation. At the moment, the bank. So loan and advances given and interest earned in the ordinary course of business for financial enterprises, it is operating. For everybody else, it is investing. Hope this is clear to everybody. This is very important, because if the question comes up tomorrow and say that so investment for venture capitalist, I would still say, because what we do not buy and sell the shares, right? We do not buy and sell, or invest. Venture capitalists do not buy and sell the shares. Venture capitalists, when they operate, they buy the entity completely. So generally, it may fall under, right? It may fall under the investing activities still. However, depending on the nature, if I am buying and want to sell quickly, right? There it could fall under the operating, when I am in the business, buy, sell quickly, right? So loan advances given to subsidiary and interest earned are investing activities. Loan and advances given to employees, because employees are part of my business, employees are generating cash, means employees are helping generate cash for me. I give salaries to them. Their salaries is nothing but the operating activities. So loan given to them is also operating cash flows. Advances given to the suppliers, because again suppliers are nothing but the trade payables, right, or vendors. When I am giving something to them, they are related to my operations. Any interest earned or payment given to suppliers will always fall under the operating cash flows. Interest earned from customer for late payment are operating cash flows. So anything which is related to my operations, right? Anything which is related to my operation will always come under operating cash flows. Now, here I am talking about the other side. What if Rushi, if you sold something, purchase consideration for acquiring a business you are talking about. If it is acquiring a business, it means the investment which is happening. Okay. Rushi sold something, payment is late. So when payment will come and it is related to sale, it will be cash flow activities at the time when payment is received from operations, right? Cash flows from operations. Loan and advances taken and interest paid. If it is financial enterprises, again I go back to name. If bank and NBFCs are there, they take money from someone and give money from to somebody else. For example, they have taken money at 4% from somebody and giving it to somebody at 8%. So that that will be treated as part of their operations. So loan taken and interest paid for financial institutions, it will be part of their operations and it is operating activity. Whereas other entities, other companies, loan taken and interest paid, it is part of their finances. So it will be treated as financing activities. It will all be dependent on what is the purpose, what business you are in. That would decide what you should do, whether you should consider the loan, whether you should, whether you should consider that as an operation, whether you should consider that as an finance, right? So for financial enterprises, it is operating. For non-financial, it is financing. Loan advances taken from subsidiaries. Again, here we are talking about non-financial, so it will always be financing activities because I am taking fund from the subsidiaries or to the parent also, right? So that will also be there. Advances taken from customers, interest paid because they are related to my operations, so that will become part of my operating activities. Interest paid to suppliers and late payment, for late payment, that is nothing but the amount which is related to my operations, operating activities. Interest taken as part of inventory cost in accordance with AS 16 borrowing cost. When interest taken as part of inventory cost in accordance with the AS16 because it is going under inventory and inventory is part of operation always. The treatment of dividend and interest paid and received in indirect method. So something will definitely come, right? So we have everything which is mentioned here. Now, if we talk about companies where you wanted to understand investment made and dividend earned, investment made and dividend earned, right? So it can also answer the question, Harsha, that what happens, right? What happens if it is a venture capitalist also? As I mentioned, right? As I mentioned, if I am interested just to invest money and earn the dividend from that, sometimes the of, let's say, sale and purchase of the stock, right? The shares, right? I do share trading. My company is involved in the share trading business. So when I am in the share trading business, I am not actually doing the investment. I am buying or I am managing my operations. So if it is financial enterprise, NBFCs, where their role is to buy or sell the investments, right? Buy or sell the investments, right? So Ayushi, as I mentioned, that let's say share trading company, right? Let's assume Motilal Oswal. What they do, they buy shares, they sell shares, sometimes on behalf of customer, sometimes for themselves also. They have money, they know that the share price of something is going to go up, right? So what they want to do, they invest in that. So banks, when they have extra fund, let's assume banks, if they have extra fund, or LIC, when they have extra fund, what they do when you pay the insurance premium, they do not keep the insurance premium with them. They invest that insurance premium somewhere else, right? When they invest that insurance premium somewhere else, it means that they either invest in debentures, they invest in equity, they can invest further so that insurance premium which you have deposited can make money for them. So it means those companies when so those companies which are in the business where they get the money and they invest that money further, right? Whether in the form of a debenture, means debenture investment, or whether they are investing somewhere in the equity shares. So for them, it is part of their operations. Whereas for other companies, it will be treated investment. So it means for financial companies, we have to look at both the things differently. Diksha, we do include interest as part of inventory cost. If you remember, I discussed one point that borrowing cost, right? Borrowing cost, if you remember, AS16, borrowing cost can get added to those inventories which take substantial period of time, more than 12 months. If you remember, we have taken the example of wine or real estate, right? Okay, coming back to this, investment made and dividend earned for financial enterprises, it is always part of operations. For non-financial enterprises, it is always investing activities, right? It is always in investing activities, right? Whereas investment in subsidiaries, dividend earned will always be treated as investing activities only. I hope that everybody is say here, we have seen three categories, but in these three categories, now we are talking about two different businesses. So two different businesses can have some items like investment or loan given or taken. So these items will depend on whether you are in the financial enterprises, where your operations involve these kind of business, or whether you are in the non-financial companies where your operations is something else. All these will be treated differently. Now that was dividend received. That is part of their investment, right? That is part of their investment. Oh, sorry, that is part of their operations. Anything which is related to their operations, right? Everything would be treated as, right? Would be treated as operating activities. Now, dividend paid. Dividend you always pay to your equity shareholders, right? Dividend you always pays to your equity shareholder and preference shareholder also. So dividend you always pays to your equity, right, which is the source of your fund. When dividend you always pay to your equity, it will always be financing activities, whether you are financial enterprise or non-financial enterprise. Dividend received could be the operating for financial enterprise, but dividend paid would always be financing cash flows. I hope everybody is clear up to here what is the treatment of interest, loans and dividend. So it becomes very, very important part here. The other portion comes up is the income taxes. What to do with the income taxes? Since income is always be charged on the profit, so tax paid will always be treated as operating cash flows, right? It will always be treated as operating cash flows because I always pay tax on my profit or the loss. However, if there is a tax, let's say capital gain tax, right, which is for selling the asset. If I sold the asset, which was investment activities, so tax related to the investment activities will also fall under the investment activity only. If I have been taxed, right, for example, let's say the TDS has been deducted. TDS has been deducted for, right, TDS has been deducted for Sakshi dividend, whether it is whatever dividend you are paying, not proposed. In cash flows, we are just talking about the payment. So the payment which is going out will always be treated financing activities. Okay. So TDS, for example, let's say you have deposited money in the bank and bank is giving you interest, right? Bank is giving you interest on that amount. Bank or account, they deduct the TDS because that is the responsibility they have. They have to deduct the tax. Now, since the amount which is coming to you is coming from the investment, there you will be earning or you will be recording that as an cash from investing activities, right? On the other side, for expenses also, if you are deducting TDS for somebody, for your vendors, it is cash from operations. If you are deducting TDS for the interest which somebody has given loan, for the loan which you have taken from someone, and you are deducting TDS, there it will fall under the financing activities. So income tax follows, means income tax whether to go to operating, financing or investing depends on the item on which income tax is charged. If that item is going to operations, income tax will also goes to operations. That item goes to investment, income tax will also goes to investment. But the only thing is, income taxes should always be shown separately, should not be netted off, right? It should not be that 100 rupees I have received as interest and 10 rupees has been deducted by bank as TDS. So I should not show 90 in my books. I should show 100 interest and 10 TDS, both separate. Right? Hope this is okay with everyone. Now, let's move further. If we move further and see how we treat the insurance claims. Now, insurance claims can come for different reasons. If insurance is coming for the loss of stock or loss of profit. Now, where this stock and profit comes up, what kind of activities my inventory, what kind of activities my profit would be generated from. So what could be that? If I am getting loss of stock or loss of profit, they are actually part of my operation. Now, if insurance claims comes up, it means I am getting something which is against the loss which I have incurred in the operations. So insurance claims comes up for the loss incurred in the operation will always be considered as operating cash flows. Whereas insurance claim against the fixed assets will always be considered as investing activities because that is part of my investments, non-current assets or long-term assets. Hope this is fine. But the question is how to present that. These will always be presented separately. It should not be netted off again. These will always be presented separately in operating activities, insurance, extraordinary, cash received from this will when it is on loss of stock or profit. It will come under the investing activities. The extraordinary cash received from insurance claim on loss of any fixed assets. But they should be shown separately. Right? They should be shown separately. So if it is the loss on the fixed asset and I am getting the insurance claim against that, that will be investing activities. Hope this is okay with everybody. So it says disclosure of extraordinary item should always be shown separate. We should not net them or net it off or club them with any other item. Right? Moving further, somebody has mentioned earlier that sale of asset is also a non-cash item. So sale of asset is not a non-cash item. However, in profit and loss account, I generally have profit or loss, which we call gain on the disposal of fixed asset or loss on the disposal of fixed asset. gain on disposal or loss on disposal sometimes sit in my gain on disposal or loss on disposal of fixed asset sits in my profit and loss account and would be treated as income or the expense. Whereas when it comes on the cash flows, for cash flows, we consider them only one type of item, that I have received net amount, which is net of loss or profit. So whatever amount we are getting, that amount will be treated under the investing activities because I am selling the fixed asset. So I have to reverse the entry of profit or loss of fixed asset from my operating cash flows. That's something we have to. So whenever there is a TDS of any item, right? If TDS of any item is there, right? Wherever that item is going, if that item is going under operation, TDS of that will also fall under operation. If item is going under investment, TDS will also go under investment. So income tax, as I mentioned earlier, follows the item which it belongs to. Now, cash flows generally be reported either means cash from operating activities. If you remember, we discussed generally be reported in either direct method. So we use either direct method or we use either indirect method. Whatever method you are following will give you the same number. Right? Will give you the same number. It won't give you the different number. Both the methods will give you the same number. But since indirect method is simple, so many companies follow the indirect method only. It also gives us the confidence and relate the numbers from the balance sheet items. Right? But for investment and for means cash from investing activities and financing activities, we follow same direct method only. Let's look at what is the difference between direct and indirect method. In direct method, we follow just the cash movement. So let's assume I have asset where carrying value is 5 lakh. I sold the asset for rupees 3 lakh. Now what happens? What kind of activity it is? Is it financing, investing, or operating? So what happens when there is a item which has been sold lesser than the carrying value? There is a loss on disposal of 2 lakh. Which is sitting in my profit and loss account. Right? Profit and loss account. But question comes up, whether this loss which we have incurred, does it have anything to do with the cash flows? The cash flows which we have received is 3 lakh, which is the amount for sale of the asset. Now that amount will go to investing activities. It will not be the loss which is here. So loss has nothing to do here. So loss will be reversed when following indirect method, the loss will be reversed in operating activities. Means some non-cash item which is sitting in my books, for that cash is already been accounted for in investing activities. So I will record 3 lakh, I will not record 5 lakh and 2 lakh. Is that okay? So that is about that what happened when you sell the asset. Now coming back to this, when we are following direct method, what happened with the direct method? In direct method, we do not look at what is the change in the working capital, what is the difference in inventory, trade receivables, trade payable and all. We directly take the item of cash we have received from our sale. What is the cash sales we have in a year? Then we talk about how much cash we have received from trade receivable. What is the receipt from trade receivable? What is the cash we have received from sale of services? Again, what is the cash sale of services? By taking these, deduct all the payments which you have made for trade payables, operating expenses, power and electricity, wages, salaries, income taxes. So it means when you are taking directly all these things, it will automatically give you the cash flows which has happened, means the input and output, inflow and outflow of cash. So you don't have to look at the balance sheet at all. Just look at the cash transactions which has happened. Cash transaction which we have done will be falling here. We don't have to go to the balance sheet at all. Whereas in indirect method, we do not start with that how much cash we are receiving. We start with the profit and loss account balance. We start with the net profit. How much net profit company has. From there, we start making our cash flow statement. Why it is indirect? Because I am not recording all these points, whether cash received, how much cash received, how much trade receivables are there. I start indirectly from my profit. When I have started from my profit, which is coming from profit and loss account, I may have lot many items which are non-cash in nature or which may be non-operating in nature. For example, let's say interest paid. Interest paid could be non-operating but sitting in the profit and loss account. So I have to take care of that. If there is a depreciation, profit on sale, loss on sale of the asset, all those I need to adjust. And instead of taking how much cash we have received from the debtor, how much cash we have paid to it creditors, we take differences between those. That how opening debtor and opening creditors are right? How the opening debtors and opening creditors, the opening debtors and closing creditors have changed, right? When opening and closing are compared, difference between those two will always have the impact here. So since we are not following the direct method, it will be followed by the items from the balance sheet and profit and loss account instead of taking the cash transactions directly. Hope this is okay with everybody. Hari, outstanding salaries, if you have not paid, but it will not come here. That is the non-cash transaction for you for the time being, right? So it is not going to come in the cash flow statement because cash flow has not cash movement has not happened, right? I hope everyone is okay up to the point what we have discussed. So I am just taking the indirect method. In profit and loss account, I have all the items, revenue, expenses, and at the end I have profit. In the balance sheet again, we have all the items, assets, which is non-current, long-term, and current assets. Similarly, on the liability side, non-current, long-term or non-term, or current liabilities. Or we may have equity also. Now what happens? What happens that instead of starting from the cash movement, I start my cash from operations. Cash from operations from net profit. So net profit would be coming from my profit and loss account. In net profit means in profit and loss account, whatever net profit I get, there I start adding non-cash items because profit and loss account would have all the non-cash items. Right? Profit and loss account has all the non-cash items. So non-cash items when we have, this non-cash item will be added like depreciation, loss on sale of asset, amortization of goodwill or intangible asset, right? And we then deduct non-cash items which are, to add non-cash items which were expenses in the P&L, here deduct non-cash items which were income in the P&L, like profit on sale of asset. Right? So these will be added back. Items which should fall under different classification like interest expenses and interest income. It will be reversed. Once we get that, then at the end, means after this, we deduct, add and deduct change in working capital. For example, my change in inventory, which is there. Inventory movement has happened. Inventory has gone up. It means I might have received less cash, I purchased the inventory. Right? So that is how we look at our indirect method. So this is indirect method. Amortization of goodwill is nothing but amortizing a intangible asset, right? Sakshi, general reserve, generally what happens is that general reserve comes after we get the profit figures, right? So the profit or the amount which get transferred to the general reserve is coming from all the activities which have already been recorded, right? Or any payment, any dividend or any other payment which has happened to from the general reserve, that has to be taken out. So that's something which we do if we get to know that what exactly the treatment means value is, right? Otherwise, we do not look at the change in general reserve because it will be coming from the business, the changes in all the items which we have seen, right? Okay, coming here, reporting cash flows on net basis. As I mentioned earlier, right, everything, every item should not be netted off. Every item should be shown on the gross value. But some items, right, some items can be netted off. They are allowed to be netted off when and only when. For example, cash received okay, cash received so Kanya, income tax is deducted because we have to show the income tax separately. It will always be part of operation, but we have to show the income tax separately, right? Okay. Cash flows from the operating activities, investing activities, financing activities can be reported net when and only when cash received and payment is on behalf of the customer. For example, I am running property rental business. Right? I am running property rental business. Right? Anybody they can get it registered with me, and on behalf of them, they are my customer, and on behalf of them, I put their property on rent. When I put the property on rent, I do collection, and once collected, I make payment to the property owner. Now the question is here, am I doing it for myself? Am I doing it for myself? Right? No. So in this question, I was doing it on behalf of customer. When I am doing it on behalf of customer, so what I can do, I can show that if I have collected 1,000 rupees and transferred 950 to customer, so I can show that my net cash flow was 50. I am allowed when I am doing it on behalf of somebody else. Otherwise, every company has to show 1,000 receipt and 950 payments separately. Right? On the other side, it says cash receipt and payment for items in which turnover is quick, where the amount is large and maturity is short. For example, I am in the trading business I buy investment, sell investment, make money out of it. When I buy investment, sell investment, make money out of it, there also I am allowed to show the net amount of cash flows, right? I can take the option for not showing the gross amount in both cases. Whereas for financial enterprises, they can show net basis in 3 circumstances. Like for banks and everybody, how they can show? When they accept and repayment of fixed deposit. In bank, somebody is going to do the fixed deposit for a fixed maturity date, and at the same time, somebody is coming to reverse or to break that fixed deposit. So Pallavi, what happens when you mention? Okay, first let me complete this, then I'll come to your point. One is that somebody came in, bank received this year fixed deposit of 10 lakh, whereas fixed deposit broken is 9 lakh. So net amount which bank has received is 1 lakh. So in this case, since it is for fixed deposit, bank is allowed to show the net value. For the same reason, placement and withdrawal of deposit, when you go to the bank, deposit money, take the money out, all these things will be taken in the on the net basis. Advances or loan given up to the customer and repayment received. How much loan we have given, how much loan has been paid back, all these things can also be treated in the net amount, right? They are only allowed to the financial institutions. And now coming back to the question, Pallavi, profit on sale of fixed asset. Why we are saying it is non-cash, right? Or I would say it is the amount. Loss is non-cash. Profit on sale is actually the amount which belongs to other activity, right? Profit on sale which belongs to other activities. So generally we add it back and we deduct it from our operating activities and we add it back to the full amount, the gross amount to my investment activities. Right? So they are not calculating from net basis, they are allowed to show on net basis, right? When they are allowed, they can show that instead of recording everything separately, because they might have received so much of balances, they have given so much of balances. So instead of recording both the things separately, because they are doing on behalf of customer, they can show as an net amount, right? Hope this is fine with everybody. Okay. Interest and dividend, I guess we have already discussed that. For financial enterprises, this is the summary you can consider. If it is financial enterprises, interest and dividend received, right? Interest and dividend received should always be considered operating activities. Paid or received both. Sorry, interest paid and interest and dividend received. Whereas dividend paid will always be the financing activities for everybody. No, Sukna, this is not the requirement, right? So acceptance and repayment on net basis, how much loan you have given this year, how much loan you have received, or how much loan you have got repaid this year. That is for the overall number of customers. Okay. Whereas other activities or other entities, we have already discussed this thing. For other activities, if I am receiving the interest or receiving the dividend, it is investing activities. Whereas interest paid and dividend paid, right? Whereas interest paid and dividend paid should always be considered financing activities. We have already discussed this thing. We have already right. We have already discussed this thing. We have already understood the concept earlier. Non-cash transaction also. Non-cash transaction like bonus shares, issue of bonus shares, which we discussed in the beginning. Depreciation, right? All those items should be excluded from cash flow statement. These items need to be disclosed in the financial statement, maybe in the P&L, balance sheet, or notes to accounts, wherever it is required, right? Hope this is fine. So I think we have already discussed all these issues. Now coming on to what happened if you have acquired the company, acquired a business. When you acquire a business, so interim dividend also, Himanshi, right? So if it is dividend means that something which you are paying to your equity holders only, right? So it means that is nothing but the financing activities. So when you acquire a business, when you are acquiring a business, it means you are going to do a investment, right? So that will fall under the investment activities. So any cash or cash equivalent which is going will be considered under investment activities, right? Right. Whereas the important piece is it says cash flows from disposal and cash flows from acquisition. For example, I have acquired one company and I have sold one company. So I should not show netted amount. I should show gross amount for both of the transactions which has happened, right? And for that purpose, we also need to show how much consideration we have received or we have paid, or the portion of consideration. Portion means there may be a case that I am acquiring a company in the way of share exchange. If I am paying any cash, only then it should record cash, otherwise it should not record cash. It should not record cash there. And I would say the last piece here is mutual fund which gives dividend, right? So for them, we need to see, because they are not giving dividend to their investors or to their shareholders. They are giving dividend to those who have invested in that fund, right? So that is the returns which they are giving, not dividend which is coming from the net profit of the companies. All that fund, what is the value of that fund after they give it, right? Is that okay? So that returns will be treated as operations that are getting the profit distributed. That is the dividend I am talking about. That will fall under the financing activities. Okay. So foreign currency means any monetary item which we may have, for example, let's say which will be received in dollars. Now I suppose to get $10,000. When these debtors were there, the dollar value was when these debtors got recorded, dollar value was 75. $1 equals to 75. Sorry. Okay. Fine now. Let me join back again. Just give me a minute. Some issue with this screen. It was not visible, right? So debtors, let's assume we have of $10,000. When these debtors were recorded, it was $1 was equals to 75 at year end date. So year end date, the rate is changed. The exchange rate now is $1 equals to 85 rupees. Let's assume if it is 85. Earlier, debtor was 75,000 in my books. Now, because since it is monetary asset, we will be discussing that in the relevant accounting standard. Now, debtor at the year end will be 85,000. There is a change of 10,000. Now, is there any cash movement on these debtors? No cash movement. So, not to be included. Right? No cash movement for these debtors because debtor value has changed just because one single reason, that exchange rate which was 75 earlier has moved to 85 now. Right? So exchange gain and losses never add any cash inflows or outflows. Exchange gain and losses generally be treated as non-cash item which are recognized in the profit and loss account. We have to reverse the balances of exchange gain and losses. Because we need to give what is the amount which company has, what is the cash equivalent which company has, but it is not available for its use. Maybe my account is seized. Maybe it is in some other country where my amount is blocked. So I cannot use my cash equivalent. That's something I need to give a disclosure about. AS3 also encouraged to give additional disclosures for the understanding of liquidity and financial position of the company, right? Which will be like What is the undrawn borrowing facility? I have the loan of 50 crores, but I have only taken 10 crore from that. Rest of the 40 crore is still there. We are going to get. Payal, can you please repeat your query here? Right, I might have missed that. Right. So amount of undrawn borrowing facility, if any loan which I have taken, I have not utilized the full, I have only taken part of it. If undrawn facility is there, it means I still have funds which can be arranged any point in time, right, from the bank. Or what is the aggregated amount of cash required to managing the operating capacity? Maybe we may need to buy any fixed asset. We may need to sell any fixed asset. How much cash would be required to bring a new asset? That's something we always have to be clear, and that's something we have to disclose, that what is happening. So this is all what we have discussed in the AS3. I will quickly take up some of the illustrations which are coming from the study material so that we get the fair idea that what kind of questions which are there in the study material and what kind of questions we can get in the exam also. X Limited purchased debtors of 10 lakh of Y Limited, which are redeemable within 3 months of time. Yes, Rushi, there is a format for everything, right? There is a format for balance sheet, P&L and cash flows, and we have to follow the set format which is given as per the Companies Act, Schedule 3, right? So X Limited purchased the format which I have shown you earlier also, right? If you remember, I have shown you this format. So these formats are there in the study material also, but we have to follow these formats only. We have to be clear that how investing or operating activities would be prepared by looking at these numbers or these areas, right? Okay. Going back to this, here I have invested in debentures, which is to be converted in 3 months of. What exactly, how exactly, where it would be shown? Operating, financing, or investing, or none of these but somewhere else. Yes, guys, please quickly answer illustration 2. What would be the case here? Will it be operating, financing, right? Investing, or any other item? Now, only thing which has made it a different item, not coming under operating, financing, and investing, as Janvi has mentioned. Very good, Janvi. So, as Janvi has mentioned, since 3 months is mentioned, right, we would consider this as highly liquid because it is debenture also. I will get the fixed amount. I will consider highly liquid, and this will be considered as cash or cash equivalent. Okay. Moving on to illustration 3. Let's identify which activities these items belongs to, right? What we are going to do or where we are going to pass on these entries, whether it is going in the operating activities, financing, or financing or investing. Interest paid by financial enterprise. Interest paid by financial enterprise. It is bank, right, or NBFC. It is not a normal company. Always be sure about it, that which company we are talking about. If any bank or NBFCs make the interest payment, where this interest payment will go? What is the operation of bank? Providing the loan or getting the loan. When they have paid the interest, it means it is a part of their, it will go under operating duties. Very good. Aishi, Vaishnavi, Ankush. Okay. Tax deducted at source on interest received from subsidiary company. Financing, operating, or investing. Right? Tax deducted at source for the interest received from subsidiary company. Now, what is my subsidiary? My subsidiary is my investment. And the investment in subsidiary falls under investing activities. So interest from the subsidiary will also fall under investing activities. When interest is falling under investing activities, TDS on that will also fall under the investing activities. Third, deposit with bank for a term of 2 years. Deposited money for a term of 2 years. It is a kind of fixed deposit because I have taken 2 years time here. I have done a fixed deposit for a term of 2 years. Where exactly it would go? Since it is coming on the asset side, long-term asset side, this will be treated as investment and it will be coming under investing activities. Insurance claim received towards loss of machinery by fire. Right? Insurance claim received towards the loss of machinery by fire. So first one was operating. Second one is investing. Sakshi, I am getting the interest. I am not paying the interest. Okay. Third one is again investing. I am investing my money. Fourth one, insurance claim received toward loss of machinery by fire. The fourth one, because the loss of machinery is there, machinery is the investment or part of investing activities. So loss on machinery, insurance claim will also be investing activities. So it will be extraordinary amount received as insurance claim from bad debt written off. What to do with bad debt written off? If there are bad debts and those are written off, any activity. So bad debt is actually the non-cash item. It should not be recorded anywhere. Right? It should not be recorded anywhere. However, if that is coming in the profit and loss account, that amount will reverse in the cash from operating activities. If it is sitting in my profit and loss account. Here it is talking about the bad debt written off, so it should not come anywhere. Okay. Illustration 4. Right? Right, Shruti. Shruti, only then when it is a part of profit and loss account, right? If I have already recorded bad debt earlier, doubtful debt, and now writing it off, right, which was already taken to the profit and loss account, let's assume last year, then nothing to be done, right? Okay. We have been given with following items, right? We have been given with the following items, and we have to prepare cash flow statement for the year 31st March 2017. If we have been given with following items, like all the items where inflows and outflows of cash are mentioned. So we will go step by step and let's close this question quickly. So since we are following the direct method, here they have given the inflows and outflows. So when inflows and outflows are given, it means follow direct method. When you follow direct method in operating activities, you would have cash inflows and cash outflows. This is for operating activities. Then we have investing activities. Then we have financing activities. Okay. So operating, investing, and financing. So let's see which one will go where. So Akash, income tax refund or payment, both will follow the same rule, right? Both will follow the same rule, that whatever it belongs to, if it belongs to the operations, it will go to operating, right? So we have been given with opening cash balances 10,000 and 70,000. So opening cash balances are not operating, financing, or investing. So I record opening cash balances separate. And opening cash balance is given as 80,000. 10,000 plus 70,000. Now share capital issued. Since we know that issue of share capital is bringing in the fund, but it will be treated as financing activities. Then we have collection on account of trade receivables. Collection on account of trade receivables. Collection from trade receivables will come here in operations, which is 3,50,000. Sale of fixed assets is my investing activities. Which is 70,000. So we have recorded all the items of inflows. Let's look at the outflows. Payment for payables. These are outflows. Is minus 90,000. Salaries and wages minus 25,000. Overheads, again, part of this, because related to my operations only, minus 15,000. Fixed asset acquired, purchase of fixed asset, it is minus 4 lakh. Then we have debentures redeemed, the payment to debentures, minus 50,000. Then we have bank loan repaid, minus 250. Then we have taxation. Now taxation, why we are taking taxation separately? Because that is the requirement. So taxation minus 55,000. Dividend including dividend distribution tax. So I have paid dividend. That will also come under here. Minus 1 lakh. And at last we have closing balance. Which is 5,000, 15,000. 5,000 plus 10,000. So my closing number should come to 15,000. Should come to 15,000 at the end. So let's look at what is the net amount of cash we have. The net amount of cash we have, cash from operations, one lakh 65,000. Cash from investing activities, and cash from financing activities. Right. So we have got all three. We take net cash flows for the year. So net cash flows would be this plus this plus this. So my net cash flows is coming as minus 65,000. And opening cash is 80,000. So what is the closing cash flows? Closing would be opening 80 minus 65, it should come 15. If these are matching with the closing balance, it means all transactions recorded fine. That's how we prepare our cash flow statement. So we have one more illustration. I think we'll do one more illustration in our next session. So we are closing our session here, right? And you can bring your queries whenever you have, right? I suggest that illustration 5 of this, please do it yourself. That is the homework you have. Please solve illustration 5. If you have question, we will discuss it, right? Please do illustration 5 yourself, right? Thank you.